What is the CAMELS rating system? Have you ever wondered how regulators keep an eye on the health of banks? The CAMELS rating system is a key tool used by banking regulators in the United States to assess the overall condition of financial institutions like banks and credit unions. This system was designed to provide a thorough evaluation of a bank's stability and to spot any institutions that might pose risks to the financial system. So, what does CAMELS stand for? It represents 6 important factors that regulators check. First up is capital adequacy. This measures how strong a bank's capital is and whether it can handle losses. If borrowers default on loans, having enough capital is essential for a bank to stay solvent. Next is asset quality. This factor looks at how risky a bank's assets are, including loans and investments. If a bank has poor asset quality, it indicates a higher chance of loan defaults, which can lead to financial instability. The third factor is management. This assesses how capable the bank's leadership is in managing risks and running the institution effectively. Strong management is vital for a bank's success. Then we have earnings. This factor examines the bank's profitability and its ability to generate consistent income. A bank needs to make money to support its operations and build capital. Liquidity is the fifth factor. This measures how well a bank can meet its short-term obligations and handle withdrawals without any issues. A bank needs to be liquid to maintain trust with its customers. Finally, we have sensitivity to market risk. This evaluates how vulnerable a bank is to changes in market conditions, such as fluctuations in interest rates. Understanding this sensitivity helps regulators gauge potential risks. Each of these components is rated on a scale from 1 to 5, with 1 being the best performance and 5 being the weakest. An overall rating is then assigned based on these individual scores and the examiner's judgment. Banks with ratings closer to 1 are seen as sound and less risky, while those with higher ratings may face increased scrutiny and possible corrective actions. The CAMELS ratings are kept confidential and are shared only with the bank's top management and regulatory agencies. This confidentiality helps prevent public panic or bank runs. The system allows regulators to identify troubled banks early, enabling them to intervene and protect depositors while maintaining financial stability. From a Republican viewpoint, the CAMELS system is a necessary regulatory measure that ensures the safety of the banking sector. It supports free market principles by promoting transparency and accountability without overwhelming institutions with public disclosure that could destabilize markets. Republicans generally advocate for the efficient use of such regulatory tools without expanding them unnecessarily, as overregulation could hinder banking innovation and credit availability. In practical terms, CAMELS ratings guide regulatory examinations and influence supervisory actions. This helps maintain a stable banking environment, which is essential for a thriving free market economy. The system strikes a balance between oversight and allowing banks to operate competitively and responsibly.